Hey, Bill, how's it going?
It is going incredible. We got some rain in Texas last night. Oh my God. I
Texas
would have felt
rain.
like getting out in the backyard and dancing around in it. But things are going terrific. We had a very cool day today. It only hit 95, which has been about 10 to 12 degrees cooler than it has been for the last 10 days or so. It's been nuts, crazy hot. Yeah, fun day. Out looking at property today. What a shock.
Very good.
Glad we were able to do this later. How's your day been?
Just running errands, trying to get things taken care of that need to get taken care of, just personal things. No real estate work today other than the show.
So why don't we yak about the election, not about the election as the election, but about real estate post-election. What do you think is going to happen?
You know, we've seen traditionally every time an election is coming up, the presidents that are in office, especially if they're coming up for election, they safeguard that real estate market. They don't want the real estate market to sink or to suffer or anything else. And we can see that happening right now also. I mean, we are in a pandemic. We are in a financial nightmare, an economic nightmare. Regardless of the recovery that we've seen the last couple of months, we are still in a huge economic negative.
Yeah.
And we're still seeing the real estate market strong. It's still blazing hot in most areas. And what people need to understand, what people need to expect, regardless of whether they own their properties or whether they're buying properties, is that when the election is done in November, the real estate market has two traditional trends that are going to be affecting it. First, the election. Once the president doesn't have to, get everybody feeling warm and happy about real estate, or if we have a new president, he's not going to be taking office until January, and he's probably not going to do anything about it anyway, just because of who it is that's going to be taking office. And traditionally, October through February, beginning of February, are slow for real estate anyway. That's the best time to buy real estate because it is down. So what people need to keep in mind is if you are a property owner and you're planning to sell anytime within the next 6 months, now is the time to do it. Get it done before the end of October. If you are a buyer, you need to be getting ramped up because end of this year, beginning of this year, you're going to be seeing a lot of better deals. It's not going to be like crazy Armageddon, I hope, but you're going to see deals. You're going to see properties that people are going to be more motivated to sell. You're going to see probably even some better financing than what we have right now, which is unbelievable because we have crazy good financing right now. So as investors and as property owners, we need to get ourselves positioned. We need to get ourselves stationed and be ready to take advantage of this, but also be ready to not get taken advantage of when we head into this market fluctuation. Now, will it right itself? My personal opinion is it might level off a little bit in the spring, but that's just about the right time for people to start realizing that we've got foreclosures looming on the horizon. And I don't think it's going to get hot because when people see that, when the market sees that as a whole, and I say that the market sees that, it doesn't visually see it as the market, but when the factors all come together, where that is what's on the horizon, then things start to change and we see properties on market longer. We see people offering less on properties. We see people taking less for properties.
Hello, and welcome to the Investor Guys Podcast, the ultimate podcast for serious real estate investors in the know. Join your host, Bill Barnett and Kevin Mills, as they share their expert insights, strategies, and tips to help you succeed in the world of real estate investing. Get ready to level up your investment game with the Investor Guys Podcast. And now, here are your hosts, Bill Barnett and Kevin Mills.
So those are things to get ready for literally within the next year.
Yeah, if you look at a couple of things that are going on. So for us in the Southwest and all over the country within 90 to 120 days of this, by the end of 2012, is when the market just clicked. And we are now 7 full years in this thing and plus. So normal up cycles run 4 or 5 years, and we are well past that. And a lot of it has to do with just timing of what's been going on, like the election. So I absolutely agree. Nothing going to happen until we get into next year. I think we're probably looking at second quarter and maybe even third quarter before things really start to slow. If you look at the underpinnings, they're going to be really slow compared to what they would normally be. They may not look catastrophic because of it being the hottest time of the year for real estate. So once you get into March to about September, that's really hot time for real estate. So it may not look quite as slow as it could actually be. And as we get out of prime selling season, it'll really start to catch people's attention. But we're due. This has nothing to do with who the president is. This has to do with the fact that the real estate market runs in a cycle, as all businesses do, as all markets do. We are no different. And we're due. It's time for our market to cool off. We've had an incredible run. And if you know that on the front end, so you're not freaked out when things start to change, it is when you make the money, is when we're in a down market. Anybody can do okay in an up market. Serious real money and real wealth is accumulated in the real estate market when the market is down. In 2010, I bought DFW Properties, which was a brokerage firm in the Arlington area. And I had friends going, "Are you crazy? Are you not looking at what's going on in the real estate market?" And I said, "Yeah, that's exactly why I'm buying it now, is because it is undervalued now."
And let's take a break real quick. But when we get back, I want to talk about interest rates. I want to talk about what people can be doing to be getting ready. And I also want to talk about one of the things that Bill Gatton says all the time, and that's that the light is always green for real estate investors. So let's take a quick break and we'll be right back.
You are watching the Investor Guys podcast.
Live the resort lifestyle every day with Cayman K. The perfect pieces for every wardrobe. Shop the entire Cayman K collection and find your favorites. Find all our styles at CaymanK.com.
Absolution X. Lifestyle apparel like no other. Limited editions. Unique, exclusive designs. Seek your absolution. Get yours. Only at absolutionx.com.
And we are back from our break. And just before we took our break, we were talking about what both Bill and I are expecting, and I think we're pretty much on the same page, to happen as we get into election year 2020 and the year following, just over a year following, really. And I mentioned before the break that I want to talk about what investors can do to get ready. I want to talk about what's going on with current interest rates. And I want to talk about what another investor or someone who teaches investing, is Bill Gatton. One of his favorite things to say is that if you are a real estate investor, the light is always green. I want to start though with interest rates. Interest rates are already really, really low. I don't know that we can get any lower on interest rates because our interest rates are now based upon 0 to a half a point. And in order for the real estate rates to go down, prime has got to go below 0. And that means literally that they're giving away money to borrow money, which doesn't make sense.
Yeah. But there's some countries in Europe that have negative interest rates.
There are. And I think I need to go on vacation pretty soon and start taking out some loans. They could pay me interest to have their money. But I don't think that we're going to, traditionally what we see is what stimulates the market, the real estate market, is interest rates. If interest rates go down, and the Fed does that on purpose, if interest rates go down, then more people start buying, more people start refinancing. We see more movement in real estate. I don't think that that is going to be a factor that plays into what we're looking at for the next 6 to 8 months for sure. It may be something that factors in when we start getting all of these foreclosures, because something has to break at some point. When you've got that many foreclosures, if they start cranking up the interest rate, it's a doomsday scenario as far as real estate goes. But now let's talk about Bill Gatton's favorite saying, and then let's talk about how investors can position themselves. Are you familiar with Bill Gatton?
Yep.
Okay. So Bill Gatton, his specialty is subject to trusts. His favorite saying is, if you're a real estate investor, the light is always green. And his point is when it's a seller's market, as a real estate investor, you sell. And Bill and I can show you, even if you don't have properties, how to get in the middle of selling properties and how to make money from selling properties, even if you don't have your own properties to sell. So if it's a seller's market, you sell as a real estate investor. If it's a buyer's market, you buy. If it is a flat market, then you have tenants. So in that sense, Bill is correct. It is always a green light. And that is the lesson that we're going to have to take into this next year in being prepared. And I'm going to let you take over, Bill. Tell me and tell viewers and listeners what you believe they can do to position themselves to protect their own investments at this point, but also to profit from the investment opportunities coming up. Because whenever there is fluctuation in the market, there are opportunities. And this is when educated investors score the biggest, is when the market is moving either direction.
And quite frankly, I'm not being a doomsdayer and try not to be a bad guy, but hey, you know what? We make more money in a down market. It's just the nature of the beast. And what happens, so what can you do to prepare yourself for the turn in the market? It's gonna happen. And it's not something that there's anything that we're gonna be able to do to stop it. Can we push it off a little bit? Yes, the government's been doing that for a while. They will continue to do that some. But once the election is done, there's no reason for them to continue to do that. Okay, and it doesn't matter who wins. There's no reason for the government to continue to do that. They'll say, okay, now we're starting a new presidential cycle. That, again, doesn't matter who wins. We're starting a new presidential cycle. We'll let the real estate market do what the real estate market needs to do, and it's going to cool off. It's going to turn down. It's going to take back some profits that some people have and cool off, and then it'll get ready to start running back up again. So what can you do as an individual investor to prepare yourself to take advantage of the market at the time? And when I say take advantage of it, I'm not talking about taking advantage of people. I'm talking about taking advantage of the market.
Opportunities.
The opportunities, absolutely. If Microsoft were to drop $150 today, if you went out and bought Microsoft stock, you wouldn't be taking advantage of anybody. You'd be taking advantage of the opportunity that Microsoft presented. That's the kind of scenario that's going to happen in the real estate market. And there's going to be some incredible opportunities, and we're going to go in and take advantage of those opportunities, and we're actually going to be able to help people in the process. So we're going to be able to have a win-win-win scenario, and we're going to be able to help the economy by keeping money into the marketplace. We're going to be able to help ourselves by getting a great piece of real estate or a great deal on a piece of real estate. And we're going to be able to help somebody else by then what we turn around and do. We seller finance the deal to them, or when they wouldn't be able to get into a property another way, we turn it into rental property, and we offer a good rental rate. And so when you're looking at those things, it becomes a win-win-win scenario. So there's a couple of major plays that you have to be involved in. The very first one is the single most important one. and that's the one that's going on up here. The market is always good up here. If your noggin is screwed on correct, you're always going to have an opportunity to make money. And if it's not, then you got all kind of problems that start compounding. So when we see this thing turn, as it's going to, if I'm not acting out of fear, but I'm acting out of I am prepared, here's what I've been doing. So one of the things that you can do as an individual investor, especially as a fairly new investor, or if you're one of those investors that only plays in the upcycle, one of the things that you can do is you can start to put together financing opportunities, whether that's private money, whether that's fortifying and building new relationships with hard money lenders, but getting your dollars together to know that there's going to be some great opportunities, and I want to be ready to buy those. I don't want to look back and go, wow, I don't want to, 5 years down the road and go, man, we really missed some great stuff. No, you don't want to be involved in that. You want to be going, hey, you know what? The market turned. I was ready for it. I pounced on it. And now I'm getting to enjoy the rewards of that. Because what you know about real estate, whether it's something you've heard from us or you've heard from somebody else, is that you always make your money on the buy. When we purchase real estate, it's when we make the money. We get to cash that check when we sell. However, we make it on the buy. We're about to enter into an incredible buy time for smart investors. If you follow any kind of investment strategy, even a stock strategy, there's a newsletter out there called The Motley Fool who makes some incredible stock predictions. If you look at Warren Buffett, any kind of thing like that, if you're following certain people to learn when to invest, that's the scenario that we're entering into in the real estate market, which is we're going to be able to start making some incredible buys. We need to start getting ready for that now. Go ahead and be doing your business on a normal basis today, but in the back of that mind, be thinking about, where am I building those hard money relationships? Where am I building those private money relationships? Am I getting my 401k, my retirement accounts in position in the right type of accounts to be able to start using them? Because you're going to have some amazing opportunities come your way and you want to be in position. The biggest thing though is I have to know this is coming so that as I see it unfolding, I'm not freaking out. I'm not afraid. I'm not skittish. I can move.
After this break, let's talk about what they can do to position themselves specifically. Okay. We don't have the time for specifically, but general specifics, I guess. Right after this break, we'll cover that.
Thank you for watching the Investor Guys podcast.
Absolution X, limited editions, lifestyle apparel like none other. Get yours today at absolutionx.com.
Live the resort lifestyle every day with Cayman K. The perfect pieces for every wardrobe. Shop the entire Cayman K collection and find your favorites. Find all our styles at caymank.com.
We're back, and Bill was on a roll just before we left for the break. And we were talking about the opportunities that are coming and being ready for the opportunities. And saying to be ready for the opportunity is one thing, but telling you how you can be ready for the opportunity is another thing altogether. Now, we don't have time in this last segment to go over specifics for how you need to be ready and the strategies and everything else. But I want to start with some generalizations, and we can break it down a little bit in this last segment. The thing you need to be most aware of as a real estate investor who is prepared to literally make money in any market, up market, down market, flat market, anything, is diversity. Any investor will tell you you need to diversify, whether it's stocks, whether it's bonds, whether it's property, whether it's cars, whether it's tiddlywinks, whatever it is you're investing in, you need to diversify. So that means understanding different options. If you have one option that you use all the time, one strategy that you use over and over and over again, there's going to be a time when that is not going to work or is going to work very little, okay? Having a bag of tricks, and I say a bag of tricks, but really it's just a bag of strategies. Knowing what to do in different markets and how to do it is what is going to allow you to profit no matter what. So getting back to what Bill said, the light is always green. The light is always green if you know what to do with the market. So no matter where the market is, as far as in fluctuation, going up, going down, or even a flat line, if you know the strategies that you can employ to acquire property, get rid of property, even being in the middle of property, there's what a lot of real estate investors, and especially new investors, don't realize is you don't have to own the property. You don't have to buy the property in order to make a profit from it. In order to make money from a profit, or to make money from a property, all that property has to do is be in flux. It either needs to be being bought or sold, and you need to be in that mix somewhere in the right position. And you can't just put yourself in the mix. You have to know how to do that. And you may even have to create that situation. Oftentimes that's the case. What do you want to add to that, Bill?
Well, if you think about the real estate market as a river, if you will, that river is always moving. And it's really a river of money that's always moving. So if I want to get involved in making money in real estate, and even in a down market, I want to jump in where the money is, and that's in the real estate market. And so I want to look at what my different strategies are. Understand when the market is ripping and roaring like we have been, that's a fabulous time to flip property. When things cool off, it's an incredible time to do buy and hold, whether you can do rental property. And so you can get in at a very good price, and now you can hold on to that so that when we hit the next upcycle, you've got inventory to sell at a great profit if you want to. You don't have to. There's not a set path there. Your cash flow needs may be very different at that time, where I don't need to sell these houses. I can continue to get that monthly income coming in and let my equity continue to build in the property. But you can't do any of those things if you're not prepared, if you're not getting training, if you're not hopping on the podcast with Kevin and I, if you're not reading, if you're not studying, if you're not making offers, if you're not letting people know this is what I do day in, day out, real estate is my professional life. If you're not doing those things, the market will come and go, and you'll be on the sidelines watching, and it's a very expensive place to be in our world.
And for new investors, you'd be surprised how easily it is to fall into the groove of eating, drinking, breathing, living real estate. Everything you do is real estate. And it doesn't have to change your lifestyle. It doesn't have to change who you are. Once that becomes part of what you do, literally you'll talk about it with almost every person you meet. When you meet somebody new, usually part of that conversation is, what do you do for a living? I can't tell you how many people call me all the time because I'm a real estate investor. You know, they call for advice, or they call looking for properties, or they call to see if I have any properties or referrals for them. Live be that person, live that life. If you're investing in real estate, I don't care if you've invested in one piece of real estate, okay? You're a real estate investor, okay? Commit to it, own that, and know that you're going to start buying more real estate, know that you're going to start owning more real estate, and share that information with everybody you come across. And as Bill always says, when you meet those right people, you're going to know who's interested in investing with you. You're going to know who's interested in partnering with you, because they're going to let you know. They're going to speak up. Bill has a line, he said this before. You might not be interested, but would you know anybody who would be? You know, and that can be a good lead-in for a lot of different things for us as real estate investors. You have to take that first step, though. regardless of the knowledge you have or don't have. Okay, and I know a lot of people, they've taken countless courses, but they still haven't taken those steps. Whatever step it is you need to take. If you've got the knowledge, take that step and start investing. If you don't have the knowledge, take the step to gain the knowledge and then to start investing. And if you need help with any of that, Bill and I are here. And I'm going to say it because we are part of an industry, and we are all friends with most everybody else who does the same thing. Okay, we're not the only people here who want to help you out. Okay, there are plenty of people who want to help you out, who really help you out. You just have to decide that you're going to do that. Bill and I hope it's going to be us, but you're in good hands with a lot of other people as well.
So be thinking about that. Be thinking about, am I moving forward in my business? Am I preparing myself for the turn in the market so that I can capitalize on that, have a great impact on my family, and have my finances not get hammered by the fact that the market changed? So that's your charge, is to be thinking about who can I make better relationships with. So I've got funds available, I've got loans available, I've got knowledge available, I've got mentorship, I've got consulting, I've got the things that I need to be able to say, hey, Kev, can you help me out here? Here's what I'm looking at. Bill, what is it that I need to be doing? So that you have those relationships in place. And if you do, fear is not likely to overtake you as the market turns. We're telling you right now, it's going to happen. So as it starts, you can go, hey, I was on that podcast with Kevin and Bill, and they said this was going to be happening. Here it is. It's not near as scary when you've been forewarned. So you've been properly forewarned. We hope you'll get prepared, not let fear stand in your way. Join us every week right here on the Investor Guys podcast. Brother, I got nothing else. What else you got?
You know what? I just want to say one more thing is there's nobody who is going to be investing right now who doesn't remember back to 2007, okay? We are literally, 2007 was the financial meltdown for the real estate market. There's nobody here who does not remember that. How many of you right now are looking back and saying, all those opportunities that I should have taken, all those opportunities that I missed, I could have bought this, I could have bought that, I could have this now, I could have that now. Don't let this be one of those other opportunities. Don't be looking back in 5 years at 2020 and saying, you know what, I should have, Kevin and Bill told me, other people told me, I should have, I could have, and I didn't. And I also want to point out one last thing in closing, okay? Whenever we see our residential market doing this, we also see our commercial market doing this as well. Commercial markets actually have greater fluctuations than residential markets. So when a residential market is on a downswing, real estate for commercial is usually going at a sharper decline. When real estate is going up for residential, commercial usually has a sharper incline. So keep that in the back of your head as well. That's it for tonight, I think, or this afternoon. We're actually filming this evening, but we will see you guys on Wednesday. Bill, have a great rest of your day.
You too, my brother.
We'll talk to you.
Hey, thanks for being a part of us with the Investor Guys podcast. See you next time.
Join us again and have a good one. Happy investing.
Thank you for tuning in to the Investor Guys podcast. We hope you enjoyed today's episode. Don't forget to subscribe and stay updated on the latest trends and insights in the world of real estate investing. Also, don't forget to check us out and see all of our episodes at theinvestorguyspodcast.com. Email us, contact@investorguyspodcast.com. Remember, the key to financial success lies in staying informed and taking action. Stay tuned for our next episode, and until then, happy investing.